Well, let's start this morning with that news on bank CEOs headed down to Congress to testify before the Senate Finance Committee. Yahoo Finance's Cheung joins us now for a preview, Brian, of what we're expecting to hear from these bank executives this morning. Never fun to be, hauled in front of Congress on any morning, let alone this morning.
No, not at all. And if it's anything like that 2019 hearing in the House Financial Services Committee, it could be a lot of fireworks in that hearing. This time it's going to be in front of the Senate Banking Committee. 6 major bank CEOs lined up to testify this morning. That will be kicking off at around 10 a.m. There's Charlie Scharf, the head of Wells Fargo, David Solomen, the head of Goldman Sachs, Jane Fraser from Citigroup, Jamie Dimon, JP Morgan Chase, Brian Moynihan, Bank of America, and James Gorman from Morgan Stanley. These are the 6 largest U.S. financial institutions. And based off of the testimony that we've already seen them release, they were released on the website last night. It seems like all the banks are going to say that they've supported the economy through the crisis, that a lot of the lending that they did was able to support small businesses and households through the financial crisis. And they were also saying that they're prioritizing efforts on racial equity, in some cases also climate change. These are very big issues for a Senate Banking Committee that you'll recall is led by the Democrats. It's led by Ohio Democrat Sherrod Brown. So a lot of interesting things to watch on that front, as Brown himself has been fairly critical of Wall Street's role, not just in the COVID crisis, but also in the 2008 crisis. He's been very critical of Wall Street and trying to crack down on the types of deregulatory agendas that were put in place under the Trump administration when the same committee was run by the GOP. But what's very interesting is that this is the first time that all 6 major bank CEOs will be testifying on the Senate side. I recall that they actually testified on the House side. This is the first time they'll be appearing on the Senate side in this capacity, but very interesting to see the Senate bill this as an annual oversight meeting, hinting that maybe this is something we should expect in years to come, guys.
Yeah, and Brian, something else that came up in the prepared remarks from some of these executives is commentary on crypto. And we saw yesterday a story from the Washington Post, which really caught my attention, that the Biden administration has been briefed by Treasury officials on volatility in the cryptocurrency markets. And if, as you suggest, big bank CEOs will now be headed down to D.C. on a regular basis, one imagines that this is not going to become a smaller part of the conversation in years ahead.
No, and Miles, you've been very drilled into the idea of whether or not bank involvement or financial services involvement in the crypto space is ultimately helpful or harmful to the crypto ecosystem. Now, of course, when it comes to these big banks, a lot of them have differing exposures to crypto. Some of them have trading desks, some of them don't. Some of them are revising allowing these in portfolios for some of their wealth management clients. Some of them are not. So that could definitely be of interest. It remains to be seen exactly what the topics will be addressed in this hearing, because we have to understand that this is a broad oversight hearing. It's not like they're calling them specifically for any reason. It's not like this is a Archegos-specific situation, for example. This is just simply an annual oversight, I guess, as they're aspiring it to be, to check in on a number of different topics. So I would expect ESG, crypto definitely be one of them, broad regulatory issues, and maybe even racial equity, as the George Floyd protests got a lot of these banks kind of paying more attention to how their lending practices may contribute to that inequity. Those could all be very interesting topics addressed this morning.
Yeah, and Brian, just as you outlined the potential proceedings there, I'm just thinking of the headache for these bank executive teams, where you do have to be prepared for, basically any topic could come at you depending on which senator takes the floor. Let's switch gears just slightly and talk a little bit about your interview yesterday with Fed Vice Chairman Rich Clarida. And I saw it as the Fed is now talking about talking thinking about tapering, however you want to phrase that. But I feel like, Brian, you kind of got him to say it, though there is some commentary on the street this morning that Clarida did still kind of toe the line with the Fed saying it is really not time yet to begin discussing any change in their asset purchase program.
Well, and this is the real challenge when it comes to Fed speak, is you can dissect the words, and the longer you look at it, the more that you can kind of trick yourself into reading it one way or another. Now, based off of my interpretation of my conversation with the vice chairman yesterday, it sounded like he's not eager to have that conversation right now. And the way that he phrased it in saying it's possible that could come in coming meetings, well, of course, every Fed official has said at some point we would like to normalize, but he didn't necessarily put a timeline on that. So anyone saying, yes, this means that a taper talk is inevitable or coming in the next 3 to 6 months, I think is probably overreading it. But take a listen for yourself and see if you can glean whether or not QE is coming or QE tapering is coming based off of our conversation yesterday. Here was that clip.
I think the minutes stated well my thinking, and obviously most of the committee. It may well be the time that there will come a time in upcoming meetings we'll be at the point where we can begin discuss scaling back the pace of asset purchases. Obviously, that's not something that was the focus of the April meeting. Again, I think it's going to depend on the flow of data that we get.
It depend on the data, and the minutes speak for themselves, of course, referring to the April minutes showing that there were some participants on the committee that felt maybe rapid progress could get them to talk about tapering sooner than later. That it likely refers to Philadelphia and the Dallas Fed presidents who have said that since that point in time. But again, Rich Clarida is saying maybe we could have that discussion at some point later in time, at least for right now. He wants to continue to watch the data, but broadly, of course, with all these worries about inflation, who knows whether or not the Fed is going to blink. Worth mentioning that the bond markets didn't necessarily move that much on that interview yesterday. So it seems like probably Jay Powell up at the top, pretty pleased at least with how his number two performed yesterday afternoon.
Yeah, Brian, it's always fascinating to me when people want to read into Fed comments. Like, I think you can probably take them at their word that that they're going to watch the data and that they're going to talk about it when they talk about it. I don't know. Maybe I'm oversimplifying. Who knows?
With Fed speak, it's always very loaded, very complicated. But I think when you have someone from the board at that level, you should expect them to pretty much be in line with everyone else. And I think that's why he maybe didn't want to show his cards, even if that concern was underlying inside.
Yes, that makes sense. All right. Thanks so much, Brian Cheung. Appreciate it.